Hey, good morning, everybody. Today is Thursday, January 29th, 2015. My name is Cliff Backus. I'm the Chief Market Strategist for Push Button Stock Trading, and this is your daily video market review. First off, I want to apologize for not getting a video review out yesterday as a result of the storm that hit the East Coast. Our servers were down, and I was not able to get the video out yesterday. Markets got pounded again yesterday. Both the Nasdaq and the S&P closed significantly lower on heavier trade. Let's take a quick look at the Nasdaq. Yesterday, the Nasdaq Composite was down 43.51 points. That's 0.93%, almost a full percentage point. Of concern for the bulls is the fact that we closed right smack at the bottom of our daily trading range. We also closed on higher volume yesterday, giving us a distribution day. We are on a buy signal on the Nasdaq right now. I want to cover something really quick. I put in on the Nasdaq a 1% envelope around our 21-day exponential moving average because I want to make a point. The envelope shown in this black dotted line shows us where 1% on either side of our 21-day exponential moving average is. In order to go to a sell signal on the market, we're going to look for three things. First, we're going to look for the 10-day simple moving average to be lower than the day before. That's this green line right here. It is, in fact, lower than it was the day before. We're going to look for the 21-day exponential moving average to be lower than it was 2 days before. That's the pink line here. That also is lower than it was 2 days before. And the final thing we're going to look for is the Nasdaq to be trading at least 1% below its 21-day exponential moving average, or this black dotted line here, which in fact it is doing. So, why are we still on a buy signal? We should be going to a sell signal at this point. The reason is that we can't go directly from a margin signal to a buy signal. I'm sorry, from a margin signal to a don't buy signal. We were on a margin signal yesterday. Today we dropped down to a buy signal. If we don't recapture that envelope today, then we will go to a don't buy signal tomorrow. Right now, the Nasdaq Composite is bracketed by minor support in the 47.67 area, which is this low right here, and major support in the 45.47 area. In order for us to transition from a neutral short-term direction in the market to a downtrend in the market, we would have to break below this 45.47 area. On the upside, we have resistance in the 48.11 area. If we were to break above that area, that would put us into a short-term uptrend. Taking a quick look at our MACD histogram, we see the bar at the very right edge of the MACD is trading above the zero line, but is trending lower over the past 3 days. Because we're trading above the zero line, we have a bullish signal. Because we're trending lower, we have a bearish signal, which gives us a neutral immediate bias on the Nasdaq. Let's take a quick look at the S&P 500. The S&P 500 yesterday took a shellacking. It was down 27.39%, 27.39 points, or 1.35%. Volume was higher than the prior day, giving us another distribution day. That's our fourth distribution day since our confirmation of the current uptrend on January 8th. That puts our uptrend under pressure. We also are on a buy signal on the S&P 500 simply by virtue of the fact that we can't go from a margin signal to a don't buy signal without stopping first at a buy signal. If we don't recapture this lower envelope right here with today's trading, tomorrow we will go to a sell signal. To a don't buy signal on the S&P 500. The S&P right now is bracketed by minor support in the 1992 area and major support in the 1972 area. This is the area we need to break down below to transition to a short-term downtrend. On the upside, we have resistance in the 2094 area. A move above that would put us in a short-term uptrend. Right now our short-term trend is neutral. Let's take a quick look at the MACD histogram for the S&P 500. You can see at the right edge of the chart, our MACD histogram has fallen below the zero line, which is bearish. In addition, we are in a downtrend, which is also bearish. Right now, our immediate term bias on the S&P 500 is bearish. If you want to talk about the markets or any of our trading strategies, please give me a call, drop me an email, or if you'd prefer, we can make an appointment to come in the office and see what we're up to. If you're out of the area, we can set up a Skype session. See my contact information on the home page. If you've not already done so, please take a minute to go to the subscription page and subscribe to Push Button Stock Trading. Finally, take a quick look at our disclaimer video, which is posted below this one. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I'll see you again tomorrow.